Hello everyone and welcome to another of our Trader Talks videos where myself, Richard Perry, market analyst at Hantec, speaks to Steve Miley, the Market Chartist. Hello again, Steve.
Hi there, Richard. All well?
Yeah, not too bad, not too bad. We've still got obviously a big risk rally that is questionable but on track, I think, and it's a big theme that I think continues to play out with our trades at the moment. We're sort of on the cusp, I think, between bullish and maybe corrective, and I think this is a key theme that you're certainly going with today, and you've just got on the slide DAX poised. Really intriguing. What are you going to talk about, Steve?
Yeah, well, I think we are. It is very much poised, as you say. I mean, we've got this underlying bullishness very much intact, both from the whole rally up from the March lows. And then that can be broken down, I guess, really into two legs of the March-April up leg. Then we had the April-May consolidation. And then this kind of surge higher that we saw through late May into early the first part of June, a very aggressive move higher, that whole fear of missing out rally, and pushing markets up to, well, pushing the DAX here up to 12,913, taking out multiple resistance points from the whole March sell-off. So we kind of neutralized a lot of the bearishness from March. But then over the past week, we've had kind of this gut check, right? So we've had the setback, primarily driven by the Fed, last week, kind of a bit more cautious tone. After our last video, they were more cautious, highlighting potential for the US economy to stay.
Well, I think you also had the fears around China as well in the second wave.
Yeah, that's right.
That really did hit a bit of a downside move.
Exactly. So we had both of those, the Fed and then China then feeding in. So the Fed cautious about the economy, the US economy, global economy, and then China. And also those cases, as we pointed out in our last Trader Talks in here, we spoke about the cases growing in some US states. Yeah. So all of that weighing on the markets in here over the past week. But then the market that kicked off this week, is back on to risk on, right? So we've had this strong rebound rally. And I think we've got this really important bull gap.
Can you trust the rally, though? That's the question, Steve.
Exactly. Can we trust the rally? And I think for me, it's all about this bull gap in here, particularly on the DAX when focusing in here. We had this bull gap 12,132 to 11,968. And whilst above that, you can pretty much say, I think, that this recovery, we're maybe looking for the next up leg. We've held the trend line that comes up from March. We held an important little swing support, 11,510, holding at 11,598. And then all the risk for me is to the upside right now. However,
it needs to close that gap at 12,471 for me.
Yeah, on the top side. So we've got the other gap on the top side. Yeah, so above that gap on the top side then re-energizes the upside, and the close of the gap on the downside then signals the opposite. And so the market kind of, as I say, poised. And I think those
two gaps.
Yeah, 12.4, above the top side gap, aims up to the high at 12.913, the cycle high, and then maybe even we're going through 13,000 up to the all-time high back from February, March. However, if we take out the support gap, then we've got more of a topping pattern, and it's roll lower. We're going to roll lower. So for me, it's very much wait and see for the swing trader in here right now.
I think the driver of certainly the move down would be how this China story develops. DAX is a real market that is so closely aligned to the global growth story. So China coming out with increased second wave, if they can't get that under control, I think the DAX does take a bit of a leg lower once more, and we would see then that would be a lower high, potentially driving maybe even a lower low after that. So that could turn the market corrective on a near to medium term basis. But as I said, I think throughout my theme is that how this second wave in China really does develop is going to be crucial, because you've got so much support that the Fed's putting in. The US government is looking at this $1 trillion package as well.
Yes. Yeah.
It's a lot of fiscal and monetary support still in the market, still to fuel the next recovery leg higher. But if the second wave comes in, you're going to get another leg lower, and I think that would then be an opportunity to buy in due course. But I think it's really on edge. I think how we're going to be sort of moving in the next few weeks, really.
Yeah. Well, it kind of takes us then across to the Forex markets. And I know you're taking a look at euro versus dollar.
Yeah, euro dollar, similar sort of story, really. I mean, what I'm looking at is obviously we've been talking about this for a while, is the structural and dollar weakness that we've got set up now. I think that the interest rate differential is now gone for the US. I think that is going to be an ongoing situation that the dollar has got to cope with. We've got the US economy reopening, strong signs of retail recovery. Can that last is a question, but I think the Federal Reserve is going to remain very accommodative for a long time. And I think Powell reiterated that again yesterday. And I think that's going to keep any sort of dollar strength under wraps completely. And I think that ultimately the dollar corrects in that environment if the economies continue to reopen and reopen successfully without the second wave. Add into that, you've got the euro side, which is driven by obviously the ECB support and the EU recovery fund support moving towards debt mutualization. So I see a structurally positive euro story. Now, with regards to euro dollar as a chart, the near-term potential could still be for a dollar pullback and a dollar rebound, which would pull euro dollar lower. That would pull it below the 12.10 support line. That could complete a small top pattern. And we were talking earlier that would target 110 to 111 area. I think 111 area would be a good buying opportunity though for euro dollar, because I see, as I said, structurally, euro dollar, I think, is moving to test those 1490 highs in due course and beyond through the rest of the year.
So I guess the setup in here is, if you want to, there's probably a short trade opportunity if it breaks 112.
Near term.
But ultimately, we're looking to buy into that weakness for euro dollar to go higher.
I think indeed that's exactly what I'm looking at. I think that generally the indicators are set up for that. You've got uptrends going on, trading above moving averages. All euro dollar needs is a little bit of a pullback, and I think it's then going to be used as the next source of the buying opportunity.
Yeah, agreed. And I think you show that, here on the chart, we're looking at euro dollar, the momentum indicator is a little bit overbought. So we're looking at MACD, see that correction lower and then look for that buy zone somewhere down near that trend line, 111.45, 111.00 for the bigger swing trade back to the upside.
That's the way I'm looking at it. Yeah.
Cool. Excellent. Okay.
Excellent. Thanks, Steve. Well, another couple of good charts I think we've got to give out today, and hopefully we'll see how these ones develop, and we'll speak to you all next time. Thank you very much, and we'll speak to you soon.
Thank you.